You over-contributed to your HSA, you know, that unbelievable financial instrument that you hear us talk about and brag about so much. Oops, you put too much in. Now what do? I'll tell you how to fix it coming up. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. So we love the HSA, and obviously in a perfect world, you'd have free health insurance with no deductible, no out-of-pocket at all. And that's just not possible because nothing's free and we'll never get there, okay? But so many people are shifting to qualified high deductible health plans. Qualified high deductible health plans. Qualified for what? Well, it's tax qualified. It makes you eligible to open up a special bank or investment account called a health savings account, and you contribute money in there, and when you do, that contribution is deducted from your income. It's a tax deduction for your contribution. That's awesome. And then when you use that money, when you withdraw it, when you use it for qualified medical expenses, which that list is pretty long, but you've got to use it for something medical related, then you don't have to pay tax on that money. You can draw it out tax free. And while the money's in there, if you're not going to use it in the short term, if you are going to use it in the short term, leave it in cash. Don't take any risk with that contribution in your HSA. But to the extent you say, no, I'm going to cover my own medical expenses out of pocket somewhere else, let's let this money grow. You can invest it. We invest HSAs for lots of our clients. You can invest it. That growth is tax deferred. And then again, you can pull it out in the future tax free. Unbelievable tax instrument. There's nothing else like it on the tax code. So if you're trying to optimize the use of this financial instrument in your financial life, you want to make sure that you maximize your contribution every single year, which for 2021, that contribution for a single individual is $3,600. For a family, it's $7,200. And if you're 55 or older, there's an extra catch up of $1,000. So make sure that you're working with your certified financial planner, your tax preparer, to make sure you know exactly what the maximum is, you contribute that maximum. But I will tell you this, HSA contribution limits, they change a little bit, $50, $100 every year, and it's confusing. It's confusing to make sure that you're contributing the maximum, but not any more than that. The other thing that makes it confusing is, unlike your 401k and 403b, where your contribution limit is one thing and your employer match doesn't count towards that limit, any employer contributions to an HSA count towards your limit. It count towards it. So all of this says it's just easier for you to accidentally over contribute to your HSA. That's a problem. And as we do taxes for around 5,000 people, we're accustomed to seeing this and helping people fix it. If you realize you've over contributed to your HSA, don't panic. There's actually some very easy ways to fix it. And honestly, you might have already fixed it naturally. Let me explain. Number one, if you over contributed to your HSA, don't just ignore it. There's a 6% excise penalty that applies every single year until you fix it. So that gives you a tax incentive to go out there and fix it. And if you're not investing your HSA, you're not earning enough interest to cover that 6% penalty. So if you over contribute, figure it out, work with your CFP and get that thing fixed. All right, now how do you do that? The very easiest way to do it is just take the money out. Just take the money out. It doesn't need to get more complicated than that. Oh, you put an extra $100 in, take the $100 out. That's it. You don't need to, basically on your tax return, you're only going to get a deduction up to the limit. And trust me, your CPA or your tax preparer or whomever, they're going to make sure that you don't over deduct, that you don't deduct more than the limit. How do I know that? Because it's technology now. They're not going to allow you a $7,300 contribution when the limit is only $7,200. They won't. The system won't let you file a tax return that way. And so if you realize, oh, I put in $7,300 in my HSA, the limit's only $7,200. Shoot. Okay. Well, you only get the deduction for the $7,200, and then just take the extra $100 out. That's it. You don't need to tell anyone. You don't need to file anything. You don't then need to pay the penalty or nothing. You just make sure you don't get more deduction than you're allowed, which your tax software is going to make sure of that. And then second, once you identify however much you over contributed, just draw it out. You don't need to tell anyone. You don't need to whatever. Just take the money out. And sometimes people say, well, wait a second. I already spent it. I put the money in and I've been using my HSA on medical expenses. So yeah, I put too much in and my HSA is only, I've only got $50 in it. I can't draw it back out. I've already used all the money. You effectively drew it out. You already took that money back out. You're not going to get more contribution, more deduction than you're allowed. And as long as the money is not sitting in your HSA, still earning interest and growing tax-free, then you're fine. You took the money out. That's great. That's easy. Okay. So work with your certified financial planner. This can be a confusing and overwhelming thing. And hopefully what you're hearing from this video is it doesn't need to be. It doesn't need to be. Just calculate, figure out how much you over contributed and withdraw that money. If you haven't, or if you've already spent the money, great. That means you withdrew it. And just don't get too much deduction on your tax return. Say that you left the money in there and you realized I did over contribute. All right, the guy on the Wise Money Show told me to just take the money out, but I haven't contributed yet for this year. Well, you can just leave it in and apply it towards this upcoming year's contribution. And so I've got a link below with an article that tells you a little bit how to do that. But that avoids the penalty as well. You just basically, instead of taking it out, I'll apply it. I'll keep it for my next year's contribution in there, so I'm all good. And so very, very easy fix with over contributing to an HSA. Can be alarming, but there should be no reason why you'd have to pay a penalty. And number one, it's not going to be a beneficial penalty to begin with because you're just not going to be earning that extra 6%. So work with your CFP on that. And it's very, very crucially important that your CFP and your tax preparer are working together. That is absolutely critical so that you're maximizing your tax opportunities, not just for this year, but for every year throughout your lifetime, okay? That's the value of your certified financial planner. They've got to be collaborating. They've got to be working with your CPA. So if that's the relationship you've got, wonderful. I'm sure it's working great for you. If you don't have that set up, you can always contact a member of my team where we've got a team of CFPs and a full CPA firm as well, working together on one team with one goal, serving our clients and giving them financial wisdom and advice. So reach out to us. You can find us online, corehorn.com. That's Corehorn with a K. wisemoneyshow.com. You can find us there as well, or just send us an email, info@corehorn.com. All right, there you have it. Go out and take your next wise step in your financial life.